Hello, you're watching Dukascopy TV, and as the US shakes off a long weekend, US futures rallied out of nowhere and are helping to improve investor optimism. Added to that, many expect the Fed to continue its tapering program in the coming weeks, thus boosting the dollar. Well, joining me on the line is Lien of BK Asset Management in New York. Kathy, welcome to the program. Last week we saw a pretty dire reception to the figures from the likes of Intel and General Electric. Why have we seen this sudden bounce in futures despite the poor corporate reception?
Well, I think that there's still a lot of optimism for this earnings season. This earnings season in the U.S. is expected to be stronger than the earnings season in Q4 of 2012. So I think, equity traders are optimistic that we could get some good results, particularly from the tech companies. But overall, I think, with U.S. yields rising, the dollar also strengthening, there is also a general sense of optimism across the financial markets in regards to the U.S. economy and the continuation of unwinding stimulus.
Would you say then that most of this buoyancy or optimism lies at home, or in the recent injection by the People's Bank of China of $42 billion into their economy?
I think that's certainly contributing to it because we do see strength in Asian markets in particular. And one of the greatest risks for the global economy this year is a overly significant contraction in China's economy. But we all know that China manages their growth relatively well, and they try to ensure that growth slows on a steady basis. So this is one of the tactics that they use in order to mitigate a sharp contraction. And I think that investors are welcoming this noise because, where they're welcoming this news and this development because they realize that the stimulus money is not only going to provide underlying support for China, but a lot of countries that rely on export demand or rely on growth in China in order to sustain their own export sector. So this is definitely contributing to the overall optimism. It's not, believe it or not, it's not as much of a story as equity traders are really focusing on because, in the U.S. when it comes to stocks, they're very much U.S. centric. So while I do believe this is a big story, I think if you take a look at the headlines that are coming out for about the move in equity futures in the U.S., particularly the U.S. centric ones, it's really their focus on earnings as well as the ability of the U.S. economy to handle continued tapering.
Now, as we see better news coming out of the US, this continues to affect euro-dollar, of course, and it's not looking good for the euro bloc at the moment, is it?
Yeah, absolutely. I think that we've got some mixed data out of the Eurozone today, so there is still a tad bit of optimism, the reason why the euro is not just crashing outright, because we had the ZOO survey released earlier today, and if you got a chance to take a look at numbers, you'll see that we did have a nice little rise in current situations. It's more the expectations component that didn't increase as much, but it seems that investors are still optimistic on the Eurozone as a whole. So, while I think that in terms of relative monetary policies, the euro should be trading at around 133, right now, we have seen a little bit of a decline, but we've got the flash PMIs coming out later this week, and the ZOO survey says nothing about the fact that flash PMIs could be weak. I think, if anything, it suggests that the flash PMIs could still be relatively firm. So, yes, we've seen a little bit of a pullback in the U.S. In the euro-dollar today, but the decline is still relatively limited, and it's probably because data hasn't been all that terrible from the Eurozone either.
Just quickly before we go, Kathy, what are your projections for the dollar in the run-up to the Fed meeting next week and beyond?
Right. So I think that we'll probably see additional dollar strength going into the Fed meeting. I've been waiting for dollar-yen to make new highs. I think that, we may not necessarily make new highs. I think we'll be trading above 105 going into the Fed meeting. And if you focus on the euro-dollar, I think, there's a good chance that we could test the levels below 135, especially if the flash PMIs are actually weak and not strong.
Okay, thank you for that. That's all we've got time for the moment on the US. Keep checking back though for our daily updates, and I'll see you tomorrow for the press review. Goodbye.